Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hi everybody, welcome back to our live savings and pension event. I hope you had a really nice networking break. We will continue our event now with the pensions part, and therefore I'm really happy to invite Juan from Caser Seguros on the stage. Caser is an insurance group that was born more than 75 years ago. Today, their purpose is the same as it was then, to offer a valuable product and excellent service to their customers. Thank Juan for being here on the line. Also happy to have Matteo, my colleague from the Ventures department, here on the line. I will hand it over to you, Matteo, and I'm really excited about this fireside chat.
Thanks, Max, and welcome, Juan, as well. So it's really great to have you today. I guess that before kicking it off, it would be great if you could give us a brief introduction about yourself and about Caser as well.
Okay, good afternoon to all of you. Yes, I work at Caser for the last 5 years. Prior to that, I did work in Spain, New York, and London, in JP Morgan, Morgan Stanley, Citibank, in the financial world. From private banking to asset management to insurance. So I've done a little bit, a lot of different sides of the equation. No? As well, I'm in the board of a very successful technological startup in the educational front called Blake Learning. And I'm also a shareholder and I'm in the board. So very happy, very pleased because I attended this morning. I'm very insightful. And, when we go through the questions, I would like also to share failure because here at my company, we, failure. It's not the story, the game has not ended, but it's I think we all, the audience and all the participants today, who are doing something that has high value for society, because helping people to save, I think, is crucial to cover the gap, more specifically for the pension when they retire. So I think we're all doing something that has value for society, and is also therefore I'm willing to share. We also not only from our successes but also from our failures, so we can all learn from it. And in the different countries, we can then, act accordingly. So very happy as well and grateful to you to allow me to be here.
Yeah, that's great. Let's jump into it.
Okay.
So the retirement market, as you know, has evolved over the years. As we begin to see the rise of gig economy workers, as well as new technology trends and advancement, and eventually also a regulatory landscape that is definitely changing, especially in Europe. Everything is actually creating a need to be proactive in financial planning. So saying that, what are the countries that you think have advanced the most in terms of covering the gap between a sustainable pension system and the pension system that we have today, and which one have not yet?
Okay, let me see. For me, a country which is, in order to be successful, has to be strong in the 3 pillars. In my point of view, the first one, the public one, the corporate one, and the individual one. There are different countries across the world with different stages in the 3. Because I believe that the audience is very diverse and we have people from different countries. Therefore, I'm not going to use my source. I'm going to use either Mercer or Natixis, who's telling me and so I do not offend any. According to Mercer, the countries who have, the best combination of the three pillars are Holland, Denmark, Finland, and Germany. For me, Germany, it's interesting because I didn't have that concept as strong as Mercer had. And Natixis is telling me Iceland, Norway, and Sweden. So I can see some coincidence in both of them in the sense that many Nordic countries have done their homework. I believe the UK is making a huge effort with this NEST program and is catching up. And I think some Southern European countries are still a lot of work to do. And in Spain, there is some intent to do so, to develop the second pillar, but it's still very yet to be developed. For me, as I said, the combination having been strong in the three pillars, plus I think the countries who allow the individual to have ownership on the investment decision, also I think is a key factor for them to get involved. And to for me, that would be and the UK, for example, in the NEST process, in the NEST they implemented, they empower the individual to have some election on where to invest the money. And I think the more the system does that, the more successful it's going to be.
Got it. Perfect. Let's jump into the part which is more related to startups and business models, and maybe here we can feed like the part of, as you said, failure. Maybe.
Okay.
In your opinion, and considering your own experience in developing solution within Caser, what are the business model that insurers should develop to attract new generation and to increase the awareness of a long-term financial saving? Another for you is not education, but I'll lend it over to you.
No, it's, financial education, I think is critical. The only thing is it's like a light rain. It takes 1 or 2 generations to actually have an impact. So it's not that I don't believe in, I strongly believe in, but it's it's a long-term impact. The other key is information. I know many governments have sent a letter when people turn 50 or letting people know what the public pension is going to be when they retire. I mean, I believe that it's less dummy, the dummy who knows he's dummy. If you don't know you have a financial gap, you will never take action on it. So therefore, I think that governments have to do a lot in terms of informing, because I'm sure that if people were aware of what's going to be the public pension when they retire, they would do something about it. But in terms of younger generations, and it's very related to what was said this morning, I strongly believe in the concept that is save as you pay. Save as you pay. I don't know if you saw, there is a video in the web that is about a Stockholm underground station. In this video, you see it's trying to sell the concept of the Nobel Prize winner in 2017, Richard Thaler, about the little notch. And in this video, you could see a mechanical stairs in an underground station in Stockholm and physical stairs. And the local authorities wanted to promote the use of the physical stairs versus the mechanical. And what did they do? They put a piano in the physical stairs. Like if you walk in the stairs, it would sound like you were playing the piano. Prior to putting the stairs, 95% of users would go through the mechanical stairs. After they put the piano on the physical stairs, even an 85-year-old with who couldn't barely walk would go to listen to the music while he walks. It's providing the client this little nudge, so it starts to do something that is fun. And this whole concept of save as you pay. And we launched this concept very similar to, but it was, in my view, the success factor is simplicity, and we were too ambitious. Why? Because in order to be, not only was the rounding, not only were the retailers, you go to Decathlon, you go to IKEA, and you get a 3% discount, but also the utilities, basically electricity, 1% of the bill. Also telecom, Vodafone or Orange, 1% of the bill. And so why, and this is one of the reasons why we were not able to succeed, was a credit card, 1% cash back on the credit card. And so we did a pilot, and people, once they were in, the feedback is amazing. It's very, very powerful, because they go on 1%. You go and put gas, and we have a specific deal with Galp, which is one, like British Petroleum, a Portuguese, but has a presence in Spain. You put gas, you use your credit card. So you use your credit card, you get 1% cashback from the credit card. You get 3% from the retailer. So 4%, and without noticing, the whole concept is save for retirement or save for whatever goal you have, without noticing. It's a very powerful concept. But why did we fail? Or, well, failure. Why we haven't succeeded yet? For two reasons. Why? Because the reason that we made a prerequisite, the credit card, has to it makes the whole subscription process has to follow the regulation from the credit card issuer and the Bank of Spain, and the fact that we were selling a unit link with different three profiles, investment profiles, also was another different regulator. So the client experience through the subscription process was long, and therefore it had to be explained. It had to be through a broker, an insurance broker, to explain this, and that was so we didn't succeed in making it user friendly. But the second reason why we fail, and I'm sharing this so if you are thinking about doing this type of things in your different home countries, you take this into account, is that an insurance agent would go and sell this save as you pay. But the problem is that 40% of the client base would get the credit card rejected. So therefore, he had 10 clients happy. He goes and offers save as you pay. And as we made as a prerequisite that in order to join the program, he had to have the credit card, then he got 4 or 5 unpleased clients. So therefore, the insurance agency, I'm not selling this, because if I'm going to upset half of my client base because it's going to reject it for whatever reason, so I don't want to do this. So now we are redesigning the whole concept, less ambitious, maybe with rounding and retailers to start with, and then and build from there, and not making a requirement of the credit card to join the program. Why did we put the credit card? Because the 1% meant a lot of money at the end of the year in terms of savings, and because it was said before, because in order to these programs to be profitable, you need to cross-sell other products afterwards. And we know that a person with a good credit score has a good claim history. So that was the rationale behind. But the rationale behind, because now we know that a client who saves for the future, who saves on a monthly basis, and has less car accidents. There's high correlation in terms of financial responsibility and claim history. So that's what's the rationale why we made it as a prerequisite. Say, let's get less customers, but good customers we can cross-sell. But we have not succeeded in the sales force did not buy because it's rejection. But anyway, I just wanted to share that with you because the topic was highly covered this morning, and so you can learn from it and try to overcome these difficulties with your own solutions. In terms of also for the young, sorry.
Yeah, no, I totally agree. I just want to say that before we run short in time, I'd like to ask you the last question, which is also connected to the engagement part, which we talked about this morning during the first fireside chat, and the importance of, as you say, save as you pay in terms of customer acquisition cost strategy. What I'd like to ask you is, eventually, how do you see ESG fitting also the strategy and being sustainable to attract new generation?
Okay, ESG and pension plans are tied together. Why? Because they're both long-term. Pensions are for the next 15, 20 years, and we want to have an earth healthy when we get to retirement. So they're always very linked. I think ESG has two challenges. I think the younger generation is fully aware and is willing even to give up performance for being investing in ESG. But the challenge is with elder generation is where most of the assets are. I think in the elder generation, there's still the ESG investments have to, I believe ESG is compatible with good performance, but they need to sell this idea. So because in the elder generation, they are less aware of the ESG benefits and they seek for performance. So we have to make a communication effort, because I believe there is enough data that it sustains the argument that ESG is compatible with performance. And that is, I think that's where the challenge is. But in terms of ESG, it's here to stay. Now we have Europe 2, and coming, it's regulation in Europe. It's here to stay. And the only thing is, in the short term, for the older generation, we need to do a communication effort for them to understand that it has no impact in performance. If we do so, then I foresee a relevant growth in all the ESG products.
That's super clear. Since I don't see right now any question, I'll ask my last question actually, and I'd like to ask you finally, what are the services that you can actually add to make the offering even more attractive to the accumulation part, which is basically the last part of the journey, right, of a pension? Is something that you already thought about?
Yes, yes. For example, it's very interesting. Most of the savings in Southern European countries have gone historically to real estate. There is huge wealth in real estate in Spain, and the culture. 85% of people above 65 own a property. And what happened? What they find themselves with a very small public pension, but with a shortage of liquidity, and they sit on wealth, which is where they live off. So all these initiatives of transforming home equity into cash are, as I see, it's very popular in the UK already. And I think I foresee that in some other countries, this as a nice area to be involved. It's called reverse mortgage, or different types of solutions. We have launched it in Spain, and as there are very few competition, we are getting very good underlying assets and very good business for the company. May I say just one more thing, which is when we approach the younger generation, I mean, we make two distinctions: people who are aware of the need, or people who are not aware of the need. For people who are aware of the need, we do financial education and information. But people who are aware of the need, they might have the capacity or not the capacity. But even those who have the capacity, they might not have the discipline. So that's why I believe that the Save As You Pay has a strong growth potential, because which is, you can work on people who either don't have the capacity, and with this little nudge they do because they leverage on their consumption to save, or if they have the capacity and don't have the discipline, it allows them to have the discipline. Just wanted to add that.
Sounds great. So first of all, thanks for joining today. It was super valuable to gain your point of view. I'll recap it here since we are running out of time. We talk about new regulation and actually the European regulatory landscape. We went through the engaging and attractive business model to attract new generations, and eventually we also talk about ESG. But it was great talking to you today. Thanks again, Juan.
Okay, Mateo, just one thing: the PEP, Pan-European Pension Plans, second quarter 2022 is coming, and is across Europe. So that's another opportunity for growth. Okay.
Yeah, true. We also issue a report from Plug and Play, so I'll suggest you to all of you to go there and download it. We talk about the Pan-European pension product, and it's really a pity that we didn't have time today. But I'll hand it over again to Max. The expert.
Sorry, I know we are running out of time, but I'm just saying, as your question, Save As You Pay. They're asking the concept. Basically, it's 6 ways. You use your credit card, 1% goes to your savings product. You go to IKEA, and we have made deals with 150 retailers. 3% of the bill you pay at IKEA goes to your savings. We make an agreement with a telecom company or with a utility company. 1% of the bill goes to your saving products. So it's 6 different methods of, without you doing anything different what you do today, because you have to pay for gas, you have to pay for your groceries, you have to pay for electricity, you have to buy your furniture at IKEA. Without doing anything different, you save. That's the concept.
Okay.
Well, I can answer. What I do, because not to run out of time. I see there are different questions, but
Please,
I can answer them individually afterwards if you want.
you can pick one of the two and answer one of the two, please.
Now, in the pillar 2, by the end of the year in Spain, there is going to be a huge there's regulation that's going to change the second pillar. So we don't know we don't know 100% what it's going to be look like, but the regulator has said that he wants to replicate the nest in the UK. We will see what he's able to do, because I never trust politicians. But the idea is to replicate the model that the UK. If that is the case, we shall see huge growth in the second pillar in Spain.
Thanks, Juan. Thanks again. Telling me that now we are running out of time, but you can take the time to answer the question also after the during the next part of the event. I'll as I said, lend it over to Max, and thank you again, Juan.
Okay.